Well, all four major averages back in the red after yesterday's bounce. Tech once again the laggard as some recent high flyers return to earth. Should investors view any pullback as a buying opportunity? Well, Farr, Miller, and Washington President and CEO Michael Farr joins us. Michael, good to see you. Some of the highest valuation stocks in the market are also the biggest in tech. And so even beneath the index level, I wonder, is there anywhere to hide? Won't the whole market get dragged down if there's a sentiment shift away from tech that hits the biggest?
Hi, John. Yes, of course. The whole market, when the tide falls, everything goes down. But a lot of the stuff that really hasn't performed, though it will likely go down, doesn't go down as much. If you look at some of these companies that are up 100% in a year, they've got a lot of air underneath them. And if you listen to Jonathan Krinsky just before we came on, talking about the technical analysis, this is one of the longest periods where we really haven't gone down precipitously in a while. So technically, and after run, you would expect things to come down. But I think the earnings reports today are going to give us a lot of clarity, and a lot of clarity into the long-term strength of the consumer and the economy. So I think it's an exciting afternoon of earnings. You got to watch your show today.
So then, Michael, what would the strategy be then to buy the indices, the S&P say, when it drops here, the hot names, or maybe the names that have been less hot?
You know, my friend Jim Lebenthal has been saying buy the equal-weighted S&P 500. So much of the S&P 500 is concentrated in the Mag 7 right now, in those very narrow names. 30%, 25, 30% of the whole index is in these very few names. So you're not getting the same diversification is the worry. On the other hand, those names are being driven by AI, and I think the pricing of AI and the expectations for AI has gotten a little ahead of itself. I don't think it's going to be wrong in the long term, but it does seem that some settling, repricing, and probably testing of the right level, the right prices for those stocks is important. So can you really try to hit them where they ain't? Are there plenty of companies out there still trading at reasonable multiples that are safe and have good dividends? Yes. And I don't think this is a time for risk-taking. It's clearly a time for caution.
Michael, we've had a lot of Fed speak this week, even though we haven't necessarily had a lot of data. What is the Fed messaging here? Is December something that the markets are now perhaps taking off the table, and that's adding to the jitters we're seeing?
No question about it. Look, market's not liking what the Fed is saying, but the Fed is saying what the Fed said they were going to say, which is we are adjusting rates to find the right level. We're trying to get to equal. We're trying to get to fair. We're trying to get to even. We're not trying to ease. We're not trying to stimulate. We're not trying to accommodate. We're not changing course. So we've done 2 cuts, and now we want to wait and see, and we need to look at the data. But today's data, as you look at the earnings from a Firm or Win or Block or Expedia, I mean, all of them, I think DraftKings, Airbnb, each one of these gives you a terrific insight into the consumer, some where they're spending money they don't have, and others that are spending discretionary dollars. We know that the consumer drives the economy. Are they still going to be spending, and are they going to come through these earnings numbers? I think it's going to. This is a really important afternoon of earnings.